Cody Sell here. In this video, we're going to be looking at Fibonacci retracement specifically, how to apply them to the charts, understand how the market reacts at these retracement levels, and how we can use them to trade. So I've got EURUSD pulled up here, and let's see, let's maybe go to the 1 hour time frame, and I'm just going to scroll to the left. All these markups I had earlier. Oh, this looks like a nice area. Let's go ahead and use this area here. Okay, so a nice clear area to demonstrate how this works. So go ahead and zoom us in here. So Fibonacci retracement. Now there are 4 major levels that you guys need to know, okay, that are going to be extremely important. So let's talk about those levels right now. The first level is the 38.2 retracement level. The 38.2 retracement level is the most common market retracement level. Okay, so if you guys are looking at the market and you're seeing a swing form, the 38.2 retracement is the most likely retracement that you're going to see, right? So if the market's coming up on a 38.2 retracement level, you should be preparing to see the market react very strongly. Now, the next level is the 50 retracement level, the 50% retracement. This is an important level. It's not actually a fib level. The 50% retracement is not actually a Fibonacci sequence, but it is important in the markets. You will often see price react at the 50% level, right? It's a psychological level where buyers and sellers are saying, wait, okay, we've come more than halfway back. What's going on? Right, so it's an extremely important psychological level that you see a lot of reactions. You guys saw from the last video that USDJPY was reacting at that 50% level most of the time. Another pair that reacts a lot at the 50% retracement is EURUSD. And that's going to be one of the things you guys learn moving forward. Every pair will react more from specific levels. So one pair may respect the 38.2 way more often than it does the 50 to 61.8. Another pair may almost always go to the 61.8, right? So it's kind of up to you to kind of go in the market and play around with it and see what is most common on any given pair, what retracements you will tend to see on that pair, and it will help you when you're trading. So the 50% retracement is an important psychological retracement level. Okay. The next level that's important is the 61.8. This is the level that you will really see some reaction from, right? So if price busts through the 38.2 and the 50, you will see the 61.8 retracement. And the 61.8 retracement is personally my favorite to trade because that's where you see, usually you will see big, sharp moves, okay? So you've been in a strong uptrend, say, and then you see prices coming back down. Everyone's getting scared. Prices come down quite a bit. And then, boom, right at the 61.8, you will see a strong impulse move. And so 61.8 is my favorite level to trade. It's an extremely important level. It's the last major retracement level in the market. Now, the last level that you're going to want to know is the 78.6. This is considered the last level where a trend is still valid. So again, let's say you're in an uptrend and prices retraced all the way back down. The 78.6 retracement point is the last Fibonacci sequence that price can bounce off of while still remaining in its original trend. So if price were to break through the 78.6 retracement level, theoretically we would say that the market has completely reversed at that point. So we're going to mark this down as the last reversal point. So 61.8 is the last major retracement point where you'll see, you know, very strong moves from. But technically the 78.6, it is that last little catch that it could catch the market. But ultimately, if you see the 61.8 break, you know, you're not really going to be looking to trade from the 78.6 most of the time. Some people love the 78.6 trade. Personally, what we teach is to trade the 38.2, the 50, and the 61.8. And if price breaks the 61.8, don't start taking the other trend trade yet, because the 78.6 can catch that reversal. And if price breaks the 78.6, then at that point you have the confirmation you need to go ahead and begin taking your trades in the new market direction. So these are the 4 major levels that you guys are going to want to have marked for your Fibonacci retracements. And as you guys can see, I pull my Fibonacci's up, move them down a little bit. Guys can see we have the 38.2, the 50, the 61.8, the 78.6. The 23.6 is not an important retracement. We will not be looking to take trades off of the 23.6, but you will see some market reaction at the 23.6, and we keep it on here because it often will help us identify what the correct Fibonacci points are to be trading. So we'll use the 23.6 to see if we can see some reactions there and help us identify the correct Fibonacci. So that's why we keep it on there. And it's important that you will keep that on there too, because it will help you in the same way that it helps us. So those are the important levels. That's kind of a general understanding of how these levels work. Let's hop into the market and actually apply these things and see how they play out. So I'm going to zoom back out here, and we're going to be looking at our uptrend here. Let's just go ahead and start down here. First, what I'm going to do, just to help you guys out here, is I'm just going to mark structure. I'm going to mark structure because this is what's going to help you guys identify your Fibonacci's. And this is something that we struggled with for a long time. Understanding how to correctly apply Fibonacci's is very difficult because, like we discussed, there are so many ways that they can be applied onto the charts. But once you finally understand it, just like anything else in Forex, it kind of becomes second nature. And with practice, you get that much better. So we're marking this up here. And then we're going to go through and we're going to trade it. All right. Have this little swing here. Boom. Boom. And of course, you guys have been through the structure training. You guys know that there are multiple ways, depending on what time frame you are, to do your structure. But this is how we're going to look at the structure in front of us for our Fibonacci's. Let's start over here on the left. So we're going down. We're in a downtrend. So we're going to start from the top up here where our swing began, and we're going to bring it down so the swing ends, and we're going to pull it across. Now, in this case, price swung back up to the 23.6 retracement and came down. The 23.6 retracement is not a full retracement. So the market did not do a full retracement correction. Therefore, we know that the market still needs to do a deeper correction. So we come in on this next move, and you guys can see price flew down, and then we saw price come up here. So we're going to take our Fibonacci. We're going to start up here, and we're going to come down here to this wick and pull it across. And trying to line this wick here. Okay, boom. Notice how price did an extremely deep retracement, right? We came all the way pinpoint to our 78.6 level and retraced, came back to our 78.6 level. Again, bearish confirmations here, and then flew down. The reason why we had such an extreme retracement here was because we didn't do a full retracement on our last move, so the market needed some correction, right? So we saw that coming. Next, our next swing, we started off up here and we flew down. Let's see what retracement we got from that. So I'm going to start right here. I'm going to come down, pull it across. Okay, from here, and I'm going to zoom in here, you guys can see we came back up. You guys see these reactions here at 38.2. Price completely flew back down at 38.2. Then came back up, got rejected again. She eventually broke through, okay, got rejected from the 50 level, And then we saw this giant indecision candle, which tells me that there's a lot of volatility going on in the market right now. And then we would eventually see price come all the way through our important levels, find rejection from this 78.6 level, come back down, come back again, find rejection from the 78.6, and then boom, she broke. And what happens when the 78.6 breaks? We see a market reversal, and notice how we saw a market reversal. And that is how these Fibonacci's will work for each of your swings, right? Coming back up. Now we have a swing to the upside. So we'll start from down here where our swing began. We'll pull it up. We will pull it across. Right? And boom. So what happened? Market reversed, came down to this 50% level. As you guys have told you, the euro US dollar likes the 50% retracement level, got completely rejected, pinpoint, and then diddle daddle to the side, and then boom, continue on to the upside. So if you guys were buying in this area after the 50% rejection and you were just holding, waiting, you guys would have seen price continue to the upside, which is exactly what we would expect. The next move to the upside, our next swing up here, right? We are looking for our retracement. We come up, we come across, and boom. Look at this. So I just pinpoint touched the wick up here to where our move started down here. This right here was not a swing. If you guys are wondering, it's not a swing. I don't consider this a swing. This was a swing coming down. Now, at this point here, we saw price completely reject from this 38.2 level, come flying up, and then boom, crashed down, right? But you guys do see the interactions here at the 38.2 level. My job, my goal in this video is simply to help you guys understand that A, price does react from these levels, and B, how it reacts from these levels. So there was your reaction, boom, she shot down, and then the next point that she found support was G, right here at the 78.6, right, the important level for market reversal. And she flew up, and at this point, guys, we can look at some other swings here. So we have this swing coming down. Let's go ahead and see what's going on here. I'm going to start with this wick, pull us down to this wick, and pull us across like so. Boom, she got rejected here at the 61.8, my favorite level, because what happens at the 61.8? Boom, flies down. And even still, we didn't look at this swing here, but you guys can see coming across, this was a 78.6 pinpoint reaction. Moving over here, we look at this swing right here. We start from our wick here. We come down to our wick down here. We pull it across. And we're thinking, okay, price came to the 50, and then boom, got rejected. Came back up, got rejected from the 61.8, but then we broke trend. Okay, now I personally would have been looking at this price action here. Let me get rid of these lines so you guys can see it a little bit more clearly. I would have been looking here at price action at this 50, seeing that it kind of busted through and then back down, and thinking, I feel like my Fibonacci is slightly off right now. And if you pull it up right here to this area, where you guys can see we had this reversal here as well, so the level might just be right here. Boom, look how well this 50% was getting respected, right? And we talk about the 50% a lot of the time with Euro US dollar, and then boom, then we saw the rejection. So this was the correct Fibonacci sequence. You guys will be adjusting your fibs based on the reactions you see at these levels, but most of the time, if you just take the extremes on the swings, you will have the correct levels. Sometimes you will have to adjust down to the bodies, but again, because with everything we do in Forex, we do it in confluence with other tools, you guys will see the effectiveness of these Fibonacci sequences. Even here, guys, price began here. Your swing came as far up as this wick. You pull it across, boom. You guys see that the market came up here, came all the way back down to this 38.2, and then continued on from there. The next move, market up here. Price began right here, came up to form this swing. As it was coming down, you were watching, and look at this, guys. Boom. Came down to 38.2, got rejected. Here's your bullish price action, and you continued up from there. Even the small swings, guys, even the small swings will work. Look at this. You guys start from here. You guys come up. The market came all the way up to here, where the top of this wick is. And let me pull it across. And then came back down to the 38.2, right? This whole candlestick went all the way up, all the way down, and then came back here. That is how you guys will be applying your Fibonacci's and using these retracement ratios to see the reactions of price. And if I clear all of this off, I want you guys to see, right? So we're not always looking at the minute swings when we're trading, right? Sometimes we're going to be looking at the overall swing to figure out market direction. So for instance, if you look at the screen in front of you, this whole push seemed to initiate from this region down here, did it not? And it found resistance and began retracing from this move here. So we will throw a Fibonacci on, start with the wick, come up to the wick, and let me just see here. It does look slightly off. So guys, use this to help you, right? Price comes down. Look at the 23.6, look at the 61.8, look at the 50. If it's not aligning on its way down, adjust your fib so that when price does get to the level that it finally reacts, you have them correct. So if it comes to the 23.6, you don't see any good interactions here, adjust it. I'm going to pull it up to our bodies now. So I pulled it up to these bodies here, right here, kind of like you would a support and resistance level. And I'm looking, and now it looks like price broke through, retested from the other side several times, and then came down. When it hit the 38.2, it bounced up, and you got a little rejection here too. Let me zoom in. You got a little rejection here too, bounced up, broke through the 38.2 very hard, took a lot of pressure to do that, retested from the other side, flew down, and then finally found support on, guess what, guys? Yes, it is the 50% retracement level that Euro USD loves to find its support at, and then boom, we flew off from there all the way to our profit-taking extension 27.2, which we will discuss in the next video. So I hope you guys got value from this video. The takeaway from this video is simply understanding and feeling confident in the fact that price will react at these Fibonacci retracement levels for any given swing. So this is an extremely helpful tool in your trading, guys. We use this constantly in our trading. So rewatch this video several times, go practice in the charts, and then head on to the next video. We're going to discuss taking profit. So